Nilesh Shah from Axis Direct, he joins in with his market thoughts. Nilesh, hi, morning. What's the sense that you're getting about the market right now in the near term? You know, because we've come to pretty much a standstill. Is the market now preparing for an upside or downside move?
Undoubtedly, the markets today have priced in a lot of uncertainty related to Fed tapering. It has also priced in uncertainty related to election, and which is why hopefully markets will remain range bound around current levels rather than having significant breakaway. And the trend of the market will depend upon how the next government revives investment and economic growth.
Morning Nilesh, Nikunj Dalmia also joining in. Nilesh, the core problem for Indian stock markets is that there is no active participation from any of the retail investors. Are you getting a sense that retail confidence is making a comeback because mid-cap stocks are looking, our select mid-cap stocks are doing okay?
Undoubtedly, we believe that there has been a huge shift towards physical assets like real estate and gold over the last 5 years, where Indian savers have put more incremental money in physical products than financial products. Within financial product, retail investors' balance sheet only has less than 6% of their wealth, excluding real estate and equities. Clearly, that's a long underweight position which Indian investors have carried. Going forward, we believe the return expectations from gold as well as real estate will be moderating, and which will put other financial products like equities, mutual funds, insurance, bank deposits in a far better perspective. There will be a tectonic shift for Indian savers moving away from physical products into financial products, and certainly equity markets being one component of financial product will be having beneficial impact of the same.
So what is your view on earnings so far? Do you believe that corporate India has turned the corner now?
Certainly in certain segments of economy we have seen earnings coming ahead of expectations, coming ahead of even higher expectations. Obviously there are certain pain points where earnings are not meeting investors' expectation. However, the crucial thing which is happening is that body language of entrepreneurs seems to be changing. There is hope and the sentiments have revived. There are steps which has been taken by the government to push through reforms. And then there are certain actions in the market which has kind of revived the sentiment. The rupee depreciation has given boost to the exports. Rupee depreciation has also given competitiveness to the import substitution theme. So I can say that yes, there is definitely hope and the sentiments have revived, and hopefully the numbers will start improving as we move forward.
Nilesh, what is your take on the entire banking pack and particularly PSU banks? We've seen NPA build-up being a major concern for them, and the likes of United Bank of India are really having a bad time now.
Undoubtedly, if we see the current valuation paradigm of the banking sector, markets are trading almost all the PSU banks at a discount to their book value, and almost all the private sector banks at reasonable to significant premium over their book value. If we see the past performance, private sector banks and NBFCs have outperformed public sector banks by a big margin, and I don't foresee any change in this trend. I think the private sector banks and NBFCs will continue to outperform PSU bank, albeit PSU banks' valuations have become attractive, but they'll have to take concrete steps in addressing investors' concerns on NPA, otherwise their money will continue to flow towards private banks and NBFC.
What exactly do you make of the NASSCOM guidance of 13 to 15% growth for IT industry for this financial year?
I think if we read the transcript of major IT companies which have declared result, their expectation certainly and their guidance certainly is ahead of NASSCOM results. So probably, market will get polarized based on individual bottom-up stocks rather than just going by the guidance of this sector. In the past, we have seen n number of instances where people have outperformed the broad industry guidance by a reasonably big margin.
So what is your view on the auto industry, Nilesh, and also what do you make of Tata Motors' performance?
So in the auto sector, we'll have to make a division between commercial vehicle manufacturers, two-wheelers, and the passenger cars. And the drivers for all these three segments are completely different. The two-wheeler segment is more driven by urban consumption. Commercial vehicle is more driven by industrial and economic growth, whereas the passenger cars will be driven by urban consumption. We think from a investment point of view, two-wheelers probably provide today better opportunity vis-a-vis commercial vehicle and passenger car segment.
And Nilesh, finally, what do you make of the Urjit Patel committee report? Because clearly veterans in the banking industry are not very happy with the fine print, and there is a huge, there is a big thinking in the market that the Urjit Patel report actually is very hawkish and it will not serve the purpose.
So one, lower inflation is always supportive of better growth. That hypothesis has been tested n number of times in the past. Second, even after policy rate hike, the market yield on 10-year government security is trading below rather than higher when the policy was announced. So certainly market is not expecting this rate hike cycle to continue. Market probably believes that RBI took the right step in controlling inflation at CPI level by raising rates. But as we move forward with those steps, the inflation will come under control and there will not be further rate hike cycle. And eventually, the lowering of inflation will give elbow room to RBI to cut rates and support growth.